Hello guys. Okay, so today what we are going to do is that we are going to be doing what we call top-down analysis. So what is top-down analysis? Let us go to our whiteboard. So what is top-down analysis? Top-down analysis. Okay, what's top-down analysis? Top-down analysis is a method of chart analysis or method of a of a technical analysis which consists of analyzing a particular trade or a particular currency pair starting from the higher time frame going down to the lower time frame. For instance, the highest time frame we have on our chart is the monthly time frame, characterized as MN or simply N. Then after we have the weekly, which is also known as 1 week or week 1. Then after we have the daily, which is also known as G or day 1. Then after we have 4 hours, which is known as this 4 hours. Then after we have 2 hours. And after we have 1 hour. Then after 1 hour, this is the hourly time frame. Then when we go to the minutes time frame, now we have the 45 minutes. Then after we have the 30 minutes. Then we have the 15 minutes. We have the 5 minutes. So top-down analysis means that you first of all start by analyzing your trade based on this higher time frame. So the higher time frames always is good to start from the 4 hours right up to the monthly. We consider those as higher time frames. Higher time frame means that we take from 4 hours, 1 day, weekly and monthly. And after we have had a conviction or a certain market direction from the higher time frame, we go now to the lower time frame and get a precise point of entry and a precise point of exit of our trade that we are going to execute. Okay, now let us take that into consideration. Okay, now we are in the 4 hours. This is it. If we look at the time frame, there's 1 minute, 5 minutes, 15 minutes, 30 minutes. Look at it up there, and there's 4 hours. So if you want to change time frame, you simply click on the chart board, and this circular tool is going to show. There you simply click on 4 hours. So that is it, which is H4. Or if you want to do otherwise, you simply look up there, you will see 4 hours. You click on that. Okay, but without any much wastage of time, let us start from the 4 hours. Now what can we first of all see from the 4 hours? What we can see is that market is in an uptrend. Now what are the criteria for uptrend? The criteria for uptrend is that firstly, market should have series of higher highs and lower lows. Firstly, now the second criteria is that now there should be, if we draw our bullish trend line, points should be touching. You see, right? If we draw our bullish trend line, points should be touching. Look at the first point here, touch. First point, second point. So first point, second point, third point, fourth point has touched the bullish trend line. Now what can we deduce from here? First of all, where are the highs? This is a high, higher high, lower high, higher high, lower high, higher high, lower high, higher high, lower high, higher high. So that is what we can see from here. Higher high, lower high, higher high, lower high, higher high, and so on and so forth. So let us try to s- to see that. So this is the high here. Okay, this is another high here, another one. We keep seeing where they broke, right? Okay, and the last high, which was here. But guess what? The last high was not broken, but what was instead broken was the low. Now, the characteristics or to denote the start of a downtrend is when we see that a certain low has been taken out. Now, when the market moves in an uptrend series of higher highs, lower highs, higher highs, lower highs, higher highs, right? Now we see a peculiar action which is known as a change of character. What is a change of character? A change of character, also known as church, is when the market is changing its pattern, or is changing its movement. Now it's changing its movement from series of higher highs to now forming series of lower lows, because now from here, where do we place our trade? Because now we have seen that the first low has been created. Now what we are looking for now is for that market should now create the first lower high. Now where can the first lower high be created? The first lower high can be created in this area of resistance. Now why is this an area of resistance? This is an area of resistance because look at the first point here, which acted as a resistance zone, the second point here, which acted as a resistance zone, and this range. Look at this range, series of candles ranging in this point, acting as another resistance zone. Now to another confirmation to why this point is a resistance zone, we identify a certain type of pattern. Now the pattern I can identify here is what we studied last time, known as the dominant break sell. Now we connect the highs and lows together, the shoulders, right? I lastly said the shoulders. We connect the left shoulders, so the left shoulders have been connected successfully. Now inside that zone, we see that market is going to react. Inside this zone, you see that the zone starts from here and the zone ends here, so the market is going to react at this particular level. So now, because we have seen our entry points, where is going to be our stop loss? Usually a stop loss is always above the high of the highest high. The is always above the most recent high or the most recent low. In the case of a sell scenario, it's going to be at the most recent high. In the case if we were actually buying, the stop loss is going to be at the most recent low. So now what are we doing? We are going to buy, and our take profit, we are going to place two trades. The first take profit is going to be at the most recent low, and the second take profit if at all market is continuing to a downtrend. Therefore we are expecting the trade to go all the way down. So firstly, what do? We take this clockwise icon to place a pending order. Now what pending order are we placing? We are placing a sell limit pending order. Now notice when market passes this price line, look at this price line here, this green line that goes from left to right. So notice when market passes that price line, it changes from sell limit and changes from buy limit. So that's how market functions. You cannot place a sell limit below, because sell limits are only activated above, and as well as buy limit. So we are supposed to place our sell limit, so we place it around this level, right? Yes, we place it around this level, then we put on stop loss, look at here, there is the SL symbol. Yeah, so we click on the SL symbol. We say that the stop loss should be this zone. Then now look at what we are risking. We are risking $15.17, right? The stop loss should be this level. Then the take profit should be this level. So that's what. So we are risking $15 to gain $18. That's how you that's how you place stop loss and take profits. Now, if you are satisfied with this, now how do you actually want to increase lot size? Now, to increase your lot size, because we are trading at 0.01, we activate back this our panel. After this clock symbol, that other red and blue symbol, we click on it, is going to activate this our buy sells option. We click on this arrow, this upward arrow, to increase stop loss. So the more you add +1, +2, +3, plus and plus, it now falls to this. So we are now doing on lot size 0.05. You see that now you risk more, so you see that the values have added. So if you are done with what you are with the analysis, you click on this arrow icon to activate the order. So you click on it, it's like you enter, and you look at the symbols there. If you actually want to add, you simply click on +1 again and +1 again. But if you are okay with that, you click on place order. The order has been created. Now, to see that the order has been created, you click on trade. You see that okay, the order has been created. Now, to look at your history of trades that have had, you click on history. Now we see that a history, I made a profit of $2,000. We can see that it is in blue. And we made a swap fee. We are going to talk about swap fee in the other videos, but basically this is how you place a trade. So what we just did is that we did not finish our top-down analysis, but I was so convicted in this my trade that I forgot that we are supposed to do top-down analysis. Well, already the first thing about top-down analysis is that we should identify the previous trend. The previous trend that we identified is uptrend. Now the next thing, take note, the next thing is that we should identify the breakout. Now this is where the breakout occur, and this is where the lowest low of the uptrend was swept. So this is where the lows were swept. So we identify where the lows or the highs were swept. Now this is where the lows were swept. Now after it has been swept, we identify now is a strong area of confluence. This is that area of confluence. Now what will make that area of confluence stronger and more sharper is if we go to the smaller time frame. So let's try to go to the 30 minutes time frame. In the 30 minutes time frame, now we can see that okay, market is at a zone, and we are expecting it to reach around this level. From here to here, we are expecting market to react from this point here right up to this point here. From this point here to this point here, we are expecting market to react. And again, this whole zone is a fair value gap. If we look at here, from here to here, Okay, that's not a good color for that. Okay, if we look at what do we say a fair value gap is, we say a fair value gap is that space in between three consecutive candles of the same color. So this is one, so this is one red candle, two red candle, this is this long one, and the third red candle. Now what is that space in between them? This is that space in between them. So this is a massive fair value gap. In other words, price has to react in between this fair value gap, and that is an added confluence. So how many confluences have we given already? First of all, we have given the Quasimodo cell setup. Thirdly, it is in a strong support and resistance zone. So precisely, it is in a strong resistance zone. Thirdly, there is a fair value gap at that area. Then fourthly, market has broken or has swept the most recent low. Therefore, the sell is confirmed. So that is it, guys. So we are going to be doing more top-down analysis as we continue to trade. So stay tuned.